Herkese merhaba. Ekonomi, siyaset ve piyasalar açısından aslında kritik bir yılı geride bırakmaya hazırlanıyoruz. Bu bölümde dünya ve Türkiye ekonomisine özel bir parantez açarak dünyanın önde gelen ekonomi gazetecilerinden biriyle aslında buluşuyoruz. Financial Times baş ekonomi yazarı Martin Wolf'la birlikteyiz. Mr. Wolf, thank you so much for making this time to join us today. It's a great pleasure, really.
Pleasure for me too.
As one of the most influential economic commentators of the world, reflecting the 12 months of this year, what would be your headline summary in a few sentences about the world economy?
I suppose the simple answer is it's been better than I feared, particularly in April when Trump announced his Liberation Day tariffs. It looked as though we were going to have a truly catastrophic trade war. But in fact, that has ended up, at least so far, less bad than many people feared. Agreements have been reached with most major players, so the trade situation looks manageable. The economies have not had further huge shocks, and so they're growing in different rates on trend, roughly. Inflation is reasonably under control. There are some long-run worries, and of course, but there's also the optimism about AI. So I would say, looking at the world economy as a whole, which of course is dominated by the big economies, there are lots of smaller countries and poorer countries that are doing quite badly. But if you look at the world economy as a whole, it's, I think, in reasonable shape given the shocks that we experienced and feared.
Mr. Wolf, we often talk about potential, AI bubble. We also hear about bubbles in debt markets and bubble in crypto. Do you see multiple bubble risks forming simultaneously?
I think there are nothing is absolutely clear, but there are, I think, very many signs of bubbles. And you mentioned the obvious areas. The real question is whether they are dangerous bubbles. I divide bubbles into ones in which assets rise to very high levels, but there's not much debt associated with those assets. I think that's true of Bitcoin, for example. Obviously, some people borrow money to buy Bitcoin, but as far as I can see, if Bitcoin goes up and down, it has done so before, it doesn't have much big effect on the world economy. There are some assets which I think look a bit like that still. The AI bubble, quote unquote, is also predominantly, though it's changing clearly, predominantly being built on optimism about some very, very big companies, which are very profitable and which are easily able to afford the investments they're making. They don't have to borrow huge amounts of money. If you talk about Google or Meta, Facebook, companies like Meta is, of course, Facebook, Amazon, companies like this, they can finance it. There is clearly debt getting into it, and there is some worry about it, but so far I'm not persuaded that the debt associated with that is so worrying. I'm more worried about non-bank financial intermediation, the growth of private credit, and the associated leverage there, and the worry that there are some markets, more general debt markets, which could have really big problems and it could fall back onto the banks. So my general view at the moment is, yes, we have bubbles, but they don't seem to me really dangerous like the housing bubbles in the early part of this century.
So in a recent column, you also wrote about this. Rising public debt is one concern. Another is how it is being financed. So you basically say that, if I'm not wrong, the risk is accumulating outside the banking system. So is this mainly a liquidity risk, a leverage problem, or something more structural?
Well, as long as governments don't default, and it seems to me very unlikely that the major governments will default. They might generate inflation at some point, but the major governments borrow in their own currencies. It is almost unheard of for a country to default if it's borrowing in its own currency. So the US can print as many dollars as it needs to. So I don't see a default risk there. There could well be some severe losses if long-term interest rates rose a great deal. That means bond prices fall, and that means the collateral against which all this borrowing, which you mentioned, is occurred, will lose in value. That means that the people who are bought them will have to find some money, and it may turn out that some of them are bankrupt. It is perfectly possible in this situation. We've seen that before. Most of them don't look systemically important. So we could go through their bankruptcies okay. It wouldn't be a disaster as long as they're not very closely connected to the big banks. And there I'm not clear, but I'm reasonably optimistic that the world could get through even quite a large shock to bond prices without a disaster.
Hopefully, we hope so. So you don't see an imminent risk, for example, in 2026 then?
Well, we would need, I think, a huge inflation fear, a colossal rise in bond yields, a big collapse in bond prices, big shocks. Could that happen? It's possible, but it doesn't seem to me, looking around the world now, barring some huge shock like a war, another war, something like that in the Middle East, for example. And on the other hand, we are expecting peace between Ukraine and Russia of some kind that will probably lead to lower oil prices. That will actually help the world economy. So the problems I think we have are long-term and structural more than short-term and critical.
Yeah. So I will ask in another way. Do you think global financial markets could face a crisis comparable to 2008, or are today's vulnerabilities totally different?
This is very difficult to tell, but we know that we are making some of the same mistakes that we made in the early 2000s. There's lots of deregulation going on, particularly in the US, the regulation of the banks, the surveillance of the banks, the capital requirements, they're all being relaxed. And I'm pretty sure in time that will accumulate risks in the system, but usually it takes quite a long time. Remember back in 2008, we had a crisis, but the deregulation started 10 years earlier. So remember, it was in the late 90s that it really began, and then it went on from there. And then we had the huge housing bubble. It would seem to me very remarkable if we get into a huge problem next year, unless there's some gigantic shock. I never rule it out. But I don't see, for example, any likelihood of a huge fiscal crisis. The US is able to continue to borrow. The governments in Europe have generally smaller fiscal deficits except France. France will be managed one way or another by the EU and the ECB. So I don't see some gigantic shock, barring a real shock like a war or pandemic. And remember, this isn't related to housing, which is always very dangerous. It's related to other chancy things like AI. So I expect markets to go up and down, but I don't expect a crisis.
Okay. What about Europe? Europe is important to Turkey, our biggest trading partner. Do you think, as a union, Europe is managing well? Do you think Euro will manage to preserve its value against dollar?
Well, the macroeconomic situation in Europe is pretty good. It's growing relatively slowly. We know that, but it is growing. Inflation is on target. The ECB is pretty happy with the situation. Interest rates are moderate. So the real concern about Europe is lack of risk taking, if you like. Too little productivity growth, too little innovation. But it looks perfectly stable at the moment. As long as the war between Russia and Ukraine doesn't metastasize into something that really starts affecting Europe. I'm not predicting anything, but if we end up in a situation when Russia attacks Poland, for example, seriously, then that's a completely new world. I don't know how that will work. And in addition, of course, Germany is now spending more. It has a very strong fiscal position that will support demand in Europe. It will also increase its defense capacity, which I think is a good thing. So I'm actually moderately optimistic about Europe at the moment. I think it's in reasonable shape to manage most of the things that will happen, barring, again, some huge accident.
Mhm. What about Turkey? How do you see the position of Turkey in the big picture in the world economy and financial markets?
Well, my view has always been, it's been since I first went to Turkey, which is in the early 1980s, believe it or not, for the World Bank, is that Turkey is a country of huge potential. It's in a wonderful situation. The people are very able and enterprising. The governments have tended to make some pretty big mistakes, mostly macroeconomic policy and monetary policy. At the moment, the Turkish economy is managed by someone I greatly respect, and I think they're doing a pretty good job. It has huge opportunities because of its location, close to Europe, close to the Middle East. So I'm basically optimistic about Turkey, again, barring some external disaster or some huge mistake. I believe in the late teens, big mistakes were made in monetary policy, but provided it's politically stable, policy doesn't change, the same team manages the economy, I think Turkey is a country I've always believed has a huge potential.
Mhm. So, given the global risks, how resilient do you think Turkey economy is to these external pressures?
Well, it's pretty flexible and it's shown that, and it has opportunities in many markets. I mean, as I said, Middle East, obviously, which is booming at the moment, particularly the Gulf. The war with Israel seems to be over at the moment, which is a very good thing. So it's peaceful. With luck, that won't return, and that's something we have to thank Mr. Trump for, and I do. The Europe looks, as I said, stable. It looks as though the Ukraine war might come to some sort of end. I hope a good peace, but all that looks very good. And that's the environment for Turkey. The economies we're talking about are growing. So again, there are always possible disasters. One thing I've learned in my life, things happen you never expect. But as things are at the moment, the next year or so looks fairly good.
Last question. What do you expect from the new year, both for yourself and for economies?
Well, I expect, I hope that I will live for the next year. I'm fairly old, one always wonders. I expect to continue to work, which at my age is sort of rather self-indulgent, but I find the world utterly fascinating, and I think I have an important voice. I hope my family will be well and happy. I have 3 children and 6 grandchildren, and
Oh, great.
they are very important to me,
Of
and they're
course.
all healthy. And my older grandson is going to be 18 in 3 days. So in
Congratulations.
the
Happy
end,
birthday.
work, peace. I wish peace for everybody and a
Mhm.
happy family. These are the things that matter to me. And at the moment, I'm very lucky.
Mr. Wolf, we wish you a happy new year, a healthy and happy new year for yourself and for the world economies and all the countries
I
as well.
wish the same to you, your country, and the world. Very much so.
Thank you so much, Mr. Wolf, for making this time for us.
A great pleasure.
Financial Times baş ekonomi yazarı Martin Wolf'la buluştuk. Sözü İstanbul'a bırakalım.